Mike, we've got just forget the Fed meeting for a second. Forget the Fed meeting and interest rates. We've got a looming government shutdown, the United Auto Workers Union strike, the Hollywood strike. Does this have, all these strikes and setbacks, does it have any impact on the markets overall at all?
So the government shutdown, that affects a lot of donors. And, you know, the politicians getting their paychecks and paying back favors. So they make a big deal about it. Not a huge deal for the economy. The most recent one was in 2019, merely a blip on the radar. Hollywood's been on strike for a while now, and no one's really noticed. But this, you can't understate the significance of this auto workers strike. Okay, throughout COVID, the lack of production of cars and subsequently, you know, the subsequent demand for cars was a key inflationary factor. And all of this has to do with the Biden administration and their green nonsense. Jeff Locke just talked about Ford losing $4.5 billion on electric vehicles. I got an idea for Ford. Stop making stupid electric vehicles that no one wants to buy.
But they can't.
Go back to making the car.
No, they can't do that. You can't just ignore the government guidelines. The government is running the auto industry today. You can't opt out of their guidelines. They're in it. No choice.
Yeah, well, look, Stuart, there you have it, okay? And they want the working class people of America to pay the price. So typically, you know, a lot of conservative people like me are not on the side of labor, but they negotiated their last contract in 2019. They took huge pay cuts and furloughs during COVID, and now the cost of living has skyrocketed, and these companies have pivoted hard, these American automakers, to electronic vehicles, of which no one wants to buy. And it's going to be the union workers that are going to pay the price. So this is why they're on strike, and they need, you know, these auto workers need to talk to this Biden administration. They need to call Congress. They need to do what they can so that they can keep these workers employed. Because look, every manufacturing job at one of these automakers is responsible for 3 to 5 other jobs in America.
Well, it looks to me like Tesla emerges as the winner from this, no matter what happens. Mike, stay there. I'll bring you back on the show a bit later for some other subjects. All right, coming up. Thanks, whoa, 138. Instacart. That's the big story of the day. It's set to IPO at $30 a share. That gives it a roughly $10 billion valuation. Mike Lee back with us. Would you buy into Instacart today or wait?
I would wait, and I don't know that I'd ever buy it. You know, the stock's valuation is down. You're at $9 billion from $39 billion 2 years ago, and you know, there's questions about profitability going forward. I don't like. I think this is a cool company to use, but it's not one I'm a huge fan of.
Okay, just tell me what happened to ARM's IPO. Last week went out, first trade 56. It's still at 56. Quickly, what happened to ARM?
Yeah, look, all the big banks are trying to get the IPO market hot again. And so they went public with ARM, and a call was made out to all the big hedge funds and players. Hey, if you want to be part of IPOs going forward, you're going to need to pump this stock and support it in the aftermarket if you expect to get lucrative IPO allocations. And so they've kept it a little bit afloat, but that stock's trading at a 4 or 5 times the valuation of Nvdia, and it doesn't have anywhere near the growth. So I'm going to wait and see on that stock as well.
Okay. Disney is planning to invest $60 billion into their parks and cruise businesses. That's over the next 10 years. But that is double the amount that they've currently put into those businesses. Is that enough? $10 billion over 10 years to make you, $60 billion over 10 years to make you buy the stock?
You know, I think if you have a multi-year time horizon, Disney right here, it's a cheap stock. I think you're going to go through a fire sale with Disney. You need to start shedding some assets to unlock some value. But look, there's a lot of challenges in front of them, especially with the Hollywood strike going on and a streaming business that's not looking the way it was a couple of years ago in terms of forward growth expectations. So, you know, you need to have a longer time horizon to step into Disney here.
Sounds like a no. You're not buying it immediately. All right, Mike. Tesla, the auto workers' strike, I think, gives Tesla a huge advantage. Would you buy Tesla?
You know, I loved it a lot more when it was trading at half the price earlier this year. It's just a tough valuation in terms of stock. This is a great company. It's growing fast. The cars are unbelievable. And yes, it does have an advantage with the other companies, with the other auto companies on strike. So Tesla, it's a little bit rich for my blood, but I think, again, if it's something you're going to hold on to, I think you're going to make money over time.
All right. Amazon and Walmart shoppers, take note. Amazon's just announced another Prime Day sale event. It's going to take place October 10th and 11th. Walmart's going to be holding what they call a holiday kickoff during that same time period. Their specials will run October 9th through the 12th. Moving on to Macy's. Now, they're looking to hire 38,000 workers for the season, Christmas season. That's down from 41,000 last year and 76,000 in 2021. Target says they plan to hire 100,000 seasonal employees. That number stayed consistent over the years. Any reaction to those numbers, Mike Lee?
Well, I think the Macy's stat is it's what you could see from brick and mortar retailers, right? In that it's Amazon, the doors are, you know, the boxes are flying off the shelf as they keep continuing to take market share. Amazon is an unbelievable business, and although it's way off its lows, Amazon is the only one of those stocks I'd really step into right now. But I think you have a slowing consumer, and Amazon and Walmart are going to continue to take share away from the places like Macy's.
Okay, show me Nvdia, please. It's an extraordinary chart, but put it on the screen if you can. It's down today, but at $437 a share. Do you think, well, it's an AI monster, obviously. Do you think there's still some upside in Nvdia, Mike?
Stuart, I not only think there's upside in the stock, I've never seen anything like it. Their revenue was $6 billion in the first quarter, and it is going to be above $16 billion next quarter. That's growth like I've never seen. I'd imagine it's going to continue to grow from there. I don't know at the same rate. Everyone looks at the screen and sees a price-to-earning multiple of like 110 on Nvdia. The reality is that's much more like a 30 or 40, and that stock is much cheaper than it looks, and that's why people are calling it a bubble. There's an arms race for AI to figure out how that's going to play across corporate America, and there's going to be trillions of dollars of investment over the next decade in AI. Think about it as a massive gold rush, and Nvidia is the best pickaxe store right next to the mountain with the most gold.
That's a good analogy. That's very good. All right, Mike, thanks very much for being with us today. We do appreciate it. So we'll see you again soon. Right,
Thanks, Stuart.
Coming up, the Senate dropped its